Hi, I'm Alex Miller, and welcome to Good Things Happen, the show that invites changemakers and enablers to share their inspiring stories of progress. Whilst change can of course be uncomfortable, unexpected, and at times disruptive, it's inevitable. And more often than not, change will be for good. We'll be hearing from people from all walks of life who've been at the forefront of change, including their journeys to get here and their motivations. Because ultimately, when people work together for a common cause, good things happen.
The technology that will have the most impact in cross-border payments over the next 5 years is delivering always-on 24/7 operations, alternative cross-border payment methods, wallets, card payments, and instant payments. This is really what people want.
I have never been as optimistic as I am now about cross-border payments. The G20 roadmap and all of the activity occurring across the industry, we cannot understate what a big deal this is and the opportunities for collaboration.
Welcome to Cross-Border Payments 24/7. In our interconnected world, cross-border payments are more than just transactions. They're the very lifeblood of global commerce, driving innovation, trade, and economic growth. Today, I'm thrilled to have two distinguished guests who are leaders in this transformative field. From Bain & Company, we have Erin McCune, a trailblazer in payment strategy and fintech innovation. And joining us from Citi's Future of Finance team is Sophia Bantanidis, who works at the intersection of technology, financial regulation, and innovation. Together, we're going to delve into why cross-border payments matter now more than ever, exploring the space's rapid growth trajectory and some of the cutting-edge technologies that are reshaping the landscape. Whether you're a fintech enthusiast, a business leader, or just curious about the future of finance, this podcast is one gateway to understanding how money moves globally and why it's crucial for economic prosperity. So, grab your headphones and get ready to dive into a world where borders are mere lines on a map and payments know no boundaries. So, Sophia, you're a key leader in our Future of Finance team here at Citi Global Insights. You've worked at the intersection of technology and regulation. Why exactly do cross-border payments matter? And frankly, what is a cross-border payment?
Yeah, really good question. Well, let me tell you why they matter first, and then I'll tell you what they are. So these payments are critical for businesses to operate globally because they allow for the free flow of goods and services. So this is a really instrumental part of any global economy.
So it's the lifeblood of the global economy, effectively.
Lifeblood of the global economy. In terms of what they are, well, they're financial transactions where the financial institution of the payer and the payee are located in different countries. And that's why it's cross-border. It covers wholesale payments, retail payments, and remittances.
So pretty much every payment that goes through the system is going to be captured within this.
Yes.
So that sounds really very much like the bedrock of the global financial system. Erin, it's fantastic to have you join us here today on Good Things Happen. Just remind us your role in this space, your background, and more importantly, of course, what your view is about the forward growth outlook for cross-border payments these next 5 years. What gets you excited about this space?
Oh, Alex, thanks. It's great to be here with you and Sophia. I am a payments consultant. I've been working in this space for close to 30 years, and I'm based in California. And so obviously spend a lot of time with sort of new entrants to this space, but also work with incumbents, banks, central bankers all around the world, in fact. I have to say, I have never been as optimistic as I am now about cross-border payments. We are really dramatically improving service levels and the core infrastructure that facilitates money movement globally. And it's a very exciting time to be in this space. Having said that, we are coming off an era of rapid globalization and maturing in developing markets and extreme cross-border trade growth, and that's moderating somewhat. So we have a more modest outlook in the coming years. And there are a couple things that sort of destabilize the space. We've got macroeconomic conditions. We've got increasing sanctions activity. And so there's things that are happening in sort of the interest rate environment that sort of tamp down the sort of fervent growth that we had historically. But having said that, there are some really interesting pockets where we're seeing acceleration.
And presumably that's partly the technology all coming together, the regulators acting more cohesively.
Yes, all of those things. And, we'll get into a lot more of those factors as we dig into our discussion today. There's a remarkable sort of coalescence of effort globally around improving cross-border payments.
So you really are right at the leading edge of what's happening, both in the US, but also globally. That's fantastic for this conversation.
It's super, super interesting time for this. And I think a lot of the developments are unheralded, right? There's a misconception that cross-border is still tragically broken, when in fact it's much better than it used to be. So we'll dig into a lot of that. I want to highlight where there are interesting accelerations in cross-border. We see it intra-regional trade. If global trade is a little bit sort of down versus historical precedent, we see acceleration within the Middle East bloc of countries, and then we see a lot of activity intra-Asia. And so those are two pockets where we're seeing higher growth. We also see, as businesses are increasingly global, we see a rise in B2B e-commerce. And there you see a lot of use of marketplaces and cross-border transactions and smaller entities able to participate in the global economy much more easily. And so that's also driving growth. Where digital physical goods trade has been less buoyant, we see an acceleration in digital services. And many of those are now, because of technological developments, are able to be delivered cross-border rather than setting up professional services entities or capabilities in various geographies and selling locally. We see a lot more cross-border trade in digital services. And so that's also accelerating cross-border, cross-currency transactions. And then finally, consumers themselves are buying more cross-border. And the big categories there are travel, obviously, but education and healthcare.
So it's a global economy with a lot of different flavors, and actually a really important reminder that there is no one homogenous entity we're talking about.
No, there's a real patchwork of interdependent players, with SWIFT orchestrating the communication of the wholesale money movement, and then a bunch of banks and non-bank participants that cooperate and compete in order to affect the movement of money globally.
That's great. Well, let's move it on to the next question. Maybe, Sophia, when you think about the evolution of fintechs emerging into this space, what are you hearing from clients around their role?
Well, what I would say is that banks are certainly feeling the pressure from fintech firms entering into the cross-border payment market. Now, that's quite unsurprising if you think about the rewards that are on offer. We wrote about these rewards with some very astonishing figures in a report that we published called The Future of Cross-Border Payments. That's the figure, the $250 trillion. That's the figure by which we expect cross-border payments to grow by 2027. The revenue pool is $240 billion as per 2022, and that's also expected to grow. So it's a really attractive marketplace. We have lots of new entrants in the form of fintech firms that are coming to give healthy competition to banks. Why is this happening with fintech firms and what are they doing? They are solving problems, including lowering pricing, speeding up execution with a large range of products, increasing convenience, minimizing manual inputs, digitizing processes, doing the snazzy front end. Consumers have a sleeker experience, and this is creating competition for banks. In fact, we at Citi, our colleagues in our transaction banking business, conducted a survey where we asked our clients, what do you think about competition? What's happening? What is the market share that you can lose over the next 2 to 5 years from fintech firms? And the figure there is 10%. 10% of market share that is up for grabs from fintech firms. That's quite a lot. And this together is coming with the fact that we are seeing increasing demands from all sorts of clients, be that the corporate clients or the consumer clients, that all want 24/7 real-time payments to be seamless, payments to happen without you even thinking about it. So those are some of the developments we're seeing in the market.
Interesting. And maybe I could put that to you, Erin, as well. When you think about the role of fintechs in the ecosystem, clearly they've been growing, a lot of partnership. What do you see as what they bring to the space?
Well, I think I agree with everything that Sophia has outlined in terms of ease of use. I would also sort of amplify the focus on the specific use cases. Banks tend to have sort of a holistic offering. They're doing everything for everyone, whereas many of these new entrants are very, very tightly focused on meeting the needs of specific segments of the industry. And that helps them propel them along and focus their efforts and their investment. We did some analysis on the risk to banks related to fintech entrants to cross-border, with a particular emphasis on SMBs, which are typically higher margin customers for cross-border.
Small and medium businesses.
Yeah, yes, for small and medium businesses, because a large enterprise is going to have a lot of negotiating leverage with its financial institution and may even trade currency, buy and sell currency on the wholesale market themselves. So they're operating in a different profile in terms of revenue and margin. But SMBs are very high margin. And our Bain analysis suggests that the risk to banks on their SMB cross-border business is about 10% of the top line revenue and 30% of the profits. And it dovetails with the analysis that Sophia mentioned in the Citi publication. And there are two components to that. One is losing the customer relationship itself. And the second is losing volume and flows to the banks that become the preferred partners of these fintech and new entrants. Because each of them is typically using banks on the back end to orchestrate the money movement. And those banks that partner effectively are going to retain more of the flows, obviously at a different margin, but they will continue to be relevant to these flows. So there's two components to the risk that we outlined.
Well, I guess that begs the obvious question, Sophia, which is what are banks doing to respond to, or I guess be part of this? And I guess you see different trends around the world as well.
Yes, we certainly do. And we've written about this extensively in another report we published called Cross-Border Payments 24/7, Faster, Simpler, and Smarter. I'm not going to go through the whole thing, but I'll just highlight some of the key points and the key ways banks are responding to the competition that we've been talking about. Well, one of the things banks are doing, they're improving front and back end processes. We're seeing an increased investment here, particularly from the incumbents. Now, if you look back in time, initially, most of banks' investments was associated on the front end, such as the online platforms, the mobile apps, areas where fintechs have had an edge, the areas where fintechs have excelled traditionally in the past. But as we know, it is no longer just only about having a snazzy and sleek front end. what happens behind the scenes, the payment processing, your screening for payments, your reporting for payments has become equally important. And what we're seeing, Alex, is that banks are now directing their investments towards also improving the back end system to enhance STP straight through processing, increasing speed, providing transparency, and reducing costs. So that's one thing they're doing. Perhaps I'll touch on one more thing that we highlight in the report that I just alluded to. It's the tapping into alternative payment methods, APMs. Now, I spoke a while ago about a survey that our clients in our transaction banking business did. This was a client survey, and 69% of clients that responded to the payment, they indicated a huge client interest in alternative cross-border payment methods, these APMs that I alluded to. Now, these are payments into wallets, card payments, and instant payments. This is really what people want. Now, to tap into these APMs, alternative payment methods, banks can work with aggregators of different payment methods to avoid the complexity of connecting with each method individually and separately. They can work with these aggregators. They bundle up the payment solution together, and the partners can handle the due diligence for the local payment methods, saving the banks time and effort.
Okay, so that opens up that whole kind of umbrella of technologies which are supporting this incredible change. Maybe, Erin, let's take it first to the technology that's on everybody's kind of tongue at the moment, the tip of the tongue, generative AI. When you think about what we're seeing in terms of the opportunity that begins to open up, and of course you were early in the journey, no doubt. Maybe you could share a few thoughts there.
Yeah, first let's level set a little bit. When we talk about AI and payments, I find it's very important to remind whoever I'm speaking with that the payment industry has always been, financial services and payments have always been heavy users of technology. And there is a long history of machine learning and robotic process automation in the world of payments. So we've got a lot of mature fraud models, screening, underwriting tools that are all built on earlier generation AI.
So there's a real continuum here.
Yeah, so it's really a continuum and a new opportunity, because most of those more mature AI and machine learning models that are used in financial services and in payments specifically are dependent upon structured data. And as we move to thinking about the applicability of Gen AI, which of course is all about unstructured data, we have a new opportunity to use Gen AI capabilities in conjunction with our existing models in order to, one, synthesize information and feed it into the models in a way that is much more efficient than we've been able to do so before. So whether that's taking documentation that proves that a business is a legitimate business, or that the beneficial owners, like who owns this business, those are all really important inputs to sanction screening for cross-border payments, or whether we're looking at risk and fraud models from an underwriting perspective, those sorts of tools. We can use unstructured data to feed our existing models. And then the other component that's really interesting is that we can use the sort of interactive aspects of Gen AI to go back and query end users and understand, there's a discrepancy in these documents here. Help us understand what's going on. And there's a lot of sensitivity in the short term about, particularly in a regulated environment, of course, financial services are regulated, about having the agents, the AI agents interact directly with consumers. So what we do see is a lot of work where the customer service reps and the frontline employees of the financial institution are able to use these tools to surface the questions and do the sort of behind the scenes analysis, we're not quite to the level of having the agents doing the transacting themselves, although we're getting a lot closer. But
So the aim
a
is
slightly different topic.
The end client, be they retail or wholesale, hopefully has a smoother, faster, and less complex experience. And on the corporate side, it's a faster, more efficient, and hopefully more information-rich, insightful-rich kind of journey.
And when we look at the statistics on cross-border, with the G20 targets, we are working to improve the access, the speed, and lower the cost. And one of the biggest impediments to doing so is the friction, the process friction associated with compliance. And so the ability to use the Gen AI tools to streamline and build the efficiency of the compliance function within all the various parties in the value chain that affects these transactions is a really big and meaningful opportunity to make a difference.
Well, that's fascinating, Erin. Maybe Sophia, you could pick up that thread of AI, in particular, how you're seeing clients adopt it, and I guess people are at different stages, and I guess where you'll see the biggest impact.
Look, banks have been using AI, if I'm using the umbrella term, for years. And AI itself, if you think about it, right, logically, AI, machine learning AI, it's been around since the 1950s. So banks have been using it for years. Now, with respect to a part of AI, generative AI, banks are at the early stages of commercialization of Gen AI, including for payments. Most of the projects are in the pilot or in the proof of concept in the POC stage. That's what we're seeing. Now, I alluded to earlier on that our business, our transaction banking, did a survey of clients, and we asked our clients questions about Gen AI. Where are you on your adoption journey? Most of our clients said they are at the beginning of the adoption journey, with fintech firms being ahead. We also asked our clients, what is your barrier to adoption? Now, I'm a former regulator, both in the UK and in France. The top barrier was actually talent, access to talent, attracting the talent, and then retaining the talent. That was the top barrier. Then we asked our clients, which technology, with respect to payments and cross-border payments, do you think is going to have the most impact over the next 5 years? I thought the answer was going to be AI before I saw the results. It's not AI. The technology that will have the most impact in cross-border payments over the next 5 years, as per our clients, is delivering always-on 24/7 operations. That's the leading priority for banks, according to their survey. Top priority. Now, looking further into the future, 5 to 10 years' time, the top priority is AI, followed by blockchain and DLT.
That's fascinating. And it's always great to hear the voice of those, right at the cutting edge in terms of these businesses globally. Maybe, Erin, let's turn to some of those emerging technologies that we heard Sophia mention, whether it's so-called digital ledger technology, DLT, blockchain, digital assets. There's a lot of noise out there, and perhaps a bit less than there was before, in the sense that Gen AI is much more front and center. But how can things like CBDCs, stablecoins, the like, solve for cross-border payments? And presumably that's an incremental journey from a regulated context.
Yeah, this is a real sort of alphabet soup. There's a lot of acronyms in here, so I'm going to try to speak very specifically and define terms as we go along. And there's really been slow and steady progress on this front. And there's been sort of a hype cycle happening in the interim. And we're seeing now a resurgence of effort and attention. And much of it is being driven by the incumbents themselves as an effort to streamline and drive efficiency of wholesale settlement and money movement. So it's really a sort of evolution of market infrastructures in finance. And this has been a reaction to and really prompted by the sort of earlier enthusiasm and sort of fear of new entrants from the sort of blockchain world entering this space. And so now what we see is sort of an evolution, a more measured, regulatory blessed movement toward using new capabilities, including, of course, central bank digital currency, which is, obviously driven by the central banks themselves. So we see both domestically and cross-border efforts to use cryptocurrencies, stable coins, central bank deposit tokens, as well as central bank digital currencies. And they are in various stages of pilot and in some cases production around the world. There are also efforts to interconnect these endeavors in order to facilitate cross-border activity and streamline the efficiency and move toward 24/7. And then finally, an effort to utilize stablecoins in conjunction with traditional currencies in order to more on the retail side.
So there's a whole array of efforts to
all sorts of things happening. Yes.
And some of that's in response to the initial challenge that was thrown down, but now presumably there's a lot more partnership as you go forward as well.
A lot of partnership and a lot of actually competing platforms. It's quite fascinating, really. So it's important to distinguish between wholesale efforts, which are about streamlining the market infrastructures and the sort of bank-to-bank settlement, as well as, and then in contrast to solutions that are geared toward retail and consumer efforts.
So that's an interesting lens you're sort of suggesting our listeners kind of keep in mind when looking at news flow going forward, is kind of that distinction.
Yes. And we see, like, for instance, wholesale CBDCs. There's a lot of effort there. And there's, particularly in the ability to respond to evolving geopolitical efforts. We actually have sort of Embridge on the one side, which is sort of more China oriented, and then we have other efforts. We've got Project Agora and Project Mariana, both led by the BIS.
So these are different regions or different organizations with their own initiatives.
Exactly.
Interesting. Well, maybe, Sophia, particularly because you've got a unique sort of perspective, having worked at two regulators in your career to date, I think, if I'm right, maybe we can turn to policy and what the G20 and the big standard setters are doing to help kind of fix the forward path here.
Oh boy, have they been keeping busy? Have they been doing a lot, Alex?
I bet.
It's almost a full-time job. It is a full-time job. It used to be my full-time job, just to keep track of the agenda, right? Let alone doing the influencing and impact analysis. Look, they've been super busy. Let me start from the top. The G20 made enhancing cross-border payments a priority. They did this back in 2020. Now, why did they do this? Well, we talked about why cross-border payments are important, right? Because making these payments faster, cheaper, more transparent, more inclusive, whilst maintaining their safety, security, and accuracy and security is intended to drive widespread benefits for citizens, businesses, economies worldwide, and to support economic growth, international trade, global development, and financial inclusion. So for all of these reasons, the G20 back in 2020 said, right, this is a priority. We need to tackle it. We need to solve for cross-border payments. We need to fix it. So what happened? The Financial Stability Board, the FSB, together in coordination with the Committee on Payments and Market Infrastructures, the CPMI, and other relevant international organizations and standard-setting bodies, developed a roadmap, a map to address all of the challenges in cross-border payments. The roadmap, was endorsed by the G20. It got the stamp of approval. And the map really sets out, what does good look like for cross-border payments? It's quite extensive. It consists of 5 focus areas and 19 building blocks that represent the body of work that needs to be done to improve cross-border payments. Now, we covered these 5 building blocks and 19 areas in the report that we published, The Future of Cross-Border Payments, Who Will Be Moving $250 trillion in the Next 5 years. You can see the list of that. But the story doesn't end there. In addition to the roadmap, the Financial Stability Board, the FSB, also developed a set of quantitative global targets with the rubber stamp of approval endorsed by the G20 to be achieved that further define what good looks like for cross-border payments. This consists of targets for cost, speed, transparency, and access, covering wholesale payments, retail payments, and remittances. Quantitative targets that need to be achieved. Most need to be achieved by 2027 and some by 2030. To operationalize all of these targets, right? I said there's a lot happening. The FSB, the Financial Stability Board, developed KPIs, key performance indicators, to monitor how the industry is doing against delivery of these targets. It doesn't end there. In addition to these KPIs, they also have developed yearly reports where they're monitoring the industry and they're doing a temperature check to see how are you guys doing on delivery. So all of these together, right, they are the recipe. It's the perfect ingredients for what good should look like in cross-border payments.
So there's a huge amount of work done there.
A huge amount of work done. We're not even close to being finished, right? And we can expect on the back of these things, consultation papers, discussion papers, projects, regulatory developments in the year to come. And then to further improve things and to speed up, to make things more specific. When we talk about implementation, they've now come up with priority themes and actions to achieve the G20 targets. And these are split up into 3 buckets. So there is an awful lot out there that the industry is moving towards.
And if you were to be in our listeners' shoes, are there kind of 1 or 2 things in particular you think we're going to hear a lot more of?
Yes, if I look into the future where the policy discussion could go next, which I think is what you're asking, I would probably highlight 2 things that stand out for me. One, that these action plans, progress reports, consultation papers, what they point to is that solving for cross-border payments is not something the industry can fix in isolation. It will take all of us, the whole ecosystem, to come together to solve for it. It's almost like, you're trying to cook a Michelin star meal. We're going for the Michelin star. We've got the ingredients in the roadmap, but we need the chef, the sous chef, the team of people, and all the ingredients. Now, some of these ingredients are really hard to find and they're going to take some time, but it's going to take everyone and everything to come together to deliver on some of these things that are in the roadmap. And there is a need for a policy environment that supports more private-public collaboration and partnering with fintechs to innovate. Now, that could be through a range of things, right? Regulatory sandboxes, regulatory tech sprints, public and private industry consortia. We've seen some of these already happen, or accelerators. Without these, if we don't come together, partner up, the risk is we're going to develop a solution that's only relevant within our own geographical region, for our own balance sheet, or within our own sort of boundaries, if you like. So that's the first thing I would highlight. The second thing where I think this could go next and what I think we need is it's around ensuring uptake, right? Because it's all good having a roadmap, having something that is at a high level. But if it's not mandatory, then the risk is no one's going to implement it, no one's going to do it, and we're not going to improve cross-border payments. If I just pick on one thing of the roadmap, Alex, if I may, the ISO 20022 harmonized data requirements, that's been developed in collaboration with the payments industry. That's a key G20 priority. That's been delivered, right? Tick, done. And the harmonization requirements will take effect in 2027. But it is not a rule. That means it is down to individual entities, individual firms to implement it. If it has limited uptake, frictions in the processing of cross-border payments are going to continue to exist. So we've got the high-level goals, but if the industry doesn't get behind it in meeting the targets, then maybe it will have to eventually be compelled to do so by rules, which is a double-edged sword.
Well, we can definitely see it's a full-time job keeping on top of all that. And thank you so much for kind of distilling it. Maybe, Erin, I could just invite you to pick up that point that Sophia mentioned around ISO 20022. It sounds pretty technical, but pretty important. Why is it so important?
It is. Before I get into that, I just want to amplify for our audience the G20 roadmap and all of the activity occurring across various agencies and cooperative programs in the industry. This is an unbelievable amount of effort and momentum. We cannot understate what a big deal this is and the opportunities for collaboration. And I think two components I would underscore in terms of Sophia's comments here. One is that we're driving toward increasing interoperability between market infrastructures in various geographies. And this has been happening initially on a bilateral basis, but is moving toward multilateral. And that is going to significantly increase the efficiency of cross-border payments. And then the second piece of this is a recognition that we need to harmonize the regulatory approach around sanction screening, around the ability of non-bank participants to gain access to infrastructure, the expectations of those non-banks when they do, and sort of the extent to which the regulatory approach can be harmonized.
So level setting almost.
That will radically increase the efficiency and the effort by all of the market participants, banks and non-banks, in order to move forward in lockstep and streamline the manner in which we affect cross-border payments.
No, that's great context. Thank you.
It sounds like a lot, and it is a lot, and it's very, very important. On ISO 20022 specifically, it isn't a new spec, but we have coalesced around it as the global spec for payments, both for the new instant or real-time infrastructure that is now in 70 plus markets, as well as the wholesale wire or RTGS infrastructures. And SWIFT is moving all of its participants to the ISO 20022 spec from its proprietary standard. And that's driving the adoption, not just for cross-border, but for domestic RTGS systems to move to the ISO spec. So that's really exciting. ISO is appealing because it is data rich. It is XML. You're able to specify and use the information associated with transactions much, much easier, and is all of the different infrastructures in various geographies adopt the ISO spec. That in turn is facilitating and making it possible to do the interconnectivity that I mentioned previously, which is another important component to modernizing how we move money cross-border. But thus far, the promise of the ISO spec is largely unrealized because it's not universally adopted, nor is there one version of ISO 20022. There are like 150 different variations on the theme, and that causes a lot of friction for providers, for corporates, for banks themselves as they make their technical investments. And so what's happened is we've got a bunch of sort of intermediaries that are having to come in and facilitate developing ISO capabilities and harmonizing and translating the individual variations on the ISO spec.
So it sounds like a key enabler, but a lot of work still to be done.
A lot of work still to be done. But tremendous promise.
Sophia and Erin, and thank you both so much, because I feel like we've covered a lot of ground there, and the scope for kind of future ground to be covered is limitless by the sounds. But really appreciate both of your insights on this topic, which I know is going to resonate really a lot with different types of listeners here, both in the wholesale and the retail space. So let me just thank you and point everyone to the Citi GPS report published on this, on cross-border payments 24/7. And with that, I think we'll probably look for a wrap. Thank you both.
Thank you, Alex. Thank you, Sophia.
Thank you both.
Reference to the survey in the podcast is based on the Citi GPS report called Cross-Border Payments 24/7. The report is based on findings from the 2024 Citi Treasury and Trade Solutions survey of about 100 financial institutions from around the world, including banks, fintechs and insurance companies. The full report can be found on the citigroup.com site. Citigroup, Citi and Bain are not affiliated and are independent from each other. The speakers' views are their own and may not necessarily reflect the views of Citi or any of its affiliates. All opinions are subject to change without notice. Neither the information provided nor any opinion expressed constitutes a solicitation for the purchase or sale of any security. The expressions of opinion are not intended to be a forecast of future events or a guarantee of future results.